Hello, everyone. Thank you for attending one more of our podcast. My name is Seewing from the Real Estate Network, and my co-host is Miss Maureen McCann from Spartan Invest. Welcome, Maureen. Thank you for taking time out of your day, your very busy day to do this podcast with me. Hello,
I
welcome.
wouldn't miss it, Seewing. I'd do anything for you.
Right, absolutely. Likewise. So today's topic, without further ado, let me share my screen and we can talk about the following. We are going to talk about real estate investors out there. You, unlike a primary homeowners out there, you have many multiple options in today's housing market, even with an mortgage interest rate of 5 to 7% or even higher. Why? Well, we can go through all the steps. Now, before we go any further, as a matter of fact, before we go no further, I'm going to have Maureen explain to the audience out there. Most of the mass media and YouTuber out there, good or bad, they talk about 99% of the videos and all the presentations out there are applied to the primary home owners, the owner occupied buyers. Let me, let me give you one. They never talk about real estate investors, the true, down to earth mom and pop real estate investors that buy for cash flows, buy and hold, those kind of things. Now, Marina, I'm going to have you explain this. So, a primary home buyer, they have only one option. They can only use one criteria. They buy a primary home to live in based on how much they can afford on a monthly basis. Let me clarify that. If a 3% mortgage rate, many more home buyers were able to buy during the pandemic. We get that the last 2 years. Now at 6% interest rate, a primary owner occupied homeowner buyer, potential buyer, at 6%, they they have to qualify because their salary, because their mortgage payment are determined by the lenders by how much money they're making, how much salary, how much income they're producing per year to qualify for the mortgage. From 3 to 6%, their mortgage payment has increased tenfold, 50% more. So a lot of home buyers have only one option. They cannot afford to buy at a much higher mortgage payment so therefore they cannot buy anymore. So they're sitting on the sideline. Now, real estate investors, on the other hand, oh yeah, if they qualify to buy down payment wise, they don't need $150,000 salary or even $100,000 salary or even $50,000 salary, as long as they have the down payment, the 20 to 25% down payment, as long as they have the proper DTI, debt to income ratio, as long as they buy a investment property with in a good affordable market that can cash flow, that the rent they are collected can offset the debt service and still achieve positive cash flow. So very huge mind-boggling difference between a primary homeowner out there versus a real estate investor. And we could talk about real estate investor with various loan options, different way you can buy investment property and all that. But before we go there, Maureen, can you elaborate what I just said? The amazing 100% difference between what the media are feeding, with the primary homeowners have only one option to buy their primary home to live in, versus the investors have so many multiple entrance strategies to become a real estate investor to buy rental property for cash flow and appreciation for the long-term future. Go ahead.
Yeah, so there's definitely a different mindset between the person seeking to buy a home to live in, and then there's definitely a very vastly different mindset from an investor looking to buy a hard asset to build their net worth. And so, you make a good point. I never really thought about this until you just said it. A lot of the videos out there are really geared towards the owner occupant, right? Because these are probably more real estate agents. They're wanting to, collect and market to and fish for that primary homeowner, because that's their main client. So of course they're going to put the information out there geared towards them. And if you're, kind of brand new and you're wanting to become a real estate investor, but you're listening to real estate agents talk about, what market conditions are for the primary homeowner, it could get you messed up. I think it's a really good point. Didn't really think about that until you just said that. So, if you to make the distinction, because I own a home, I own my own primary residence, but I also own investment properties too. So you have to toggle back and forth between those two mindsets, which I can see being a little bit of a challenge. And then of course you're getting mixed messaging and you're not really sure who, to listen to. So, if you think about it, when you buy a primary residence as a homeowner, right, you pick it for a variety of reasons. You pick it because of the neighborhood. Is it safe? Is it low crime? Is it near good schools? Is it near amenities? All those things, are important to you. And we buy based off of those kind of parameters. And then we get that as a primary homeowner, we understand that, okay, I buy this property today. I'm going to live in it for a long time. And I think it's 7 to 10 years is the average someone lives in a home before they need to upgrade or downgrade, whatever it is.
Right.
And then, you're going, okay, well, if I buy today at this price, then I know that if I'm going to sell it 10 years from now, most likely over that time period, especially if we live in California, you can kind of bank on it being valued a lot more years from now, so that your big payday is when you sell it and you exit, and then you take whatever that equity growth is and they parlay it into another home or other investments or whatever, right? That's that mindset of that primary homeowner. Now let's just switch over here for a second to the real estate investor, right?
Okay.
When we enter,
I want to have you pause for a moment because you'll segue into my first slide. Okay, so let's
okay,
yeah,
okay,
yeah. I want to help you. I don't want to mess up your train of thought, but because I need for you to go with this first slide recap that you can say perfectly. Let me give you a quick rundown. Okay, option, investor. When you are contemplating purchasing, you have several loan options that will give you a cash flow. So all investors need to do is to come up with 25 to 35% down payment to achieve break even to slight positive cash flow on investment property. Hopefully, low cost market, such as Alabama, Tennessee, and Georgia, and Florida, and Texas. Anything less than $300,000, single family home, anywhere from 100 grand to 300 grand. If you get the proper rent, you will cash flow at 25% down payment. So, which is you can the loan options. I know we're not loan agents, but you can potentially buy down the points, resulting in a lower interest rate, so you can get better cash flow. Or you can even use a 40-year mortgage with a 10-year interest only to lower your payment to increase your cash flow. Maureen, before you say anything, before you continue segue with your train of thought, which I broken temporarily, is that the beauty of a real estate investor is you put up the 20 to 35% down payment. Yeah, and the lender, will risk the other, 70 to 75%. And you will have a very low risk because you put in you leverage with a low down payment. But that's where your job is pretty much done as an investor. When you have the ability to buy a low cost home with a good rent, with a proper down payment, as I indicated here, then the rest is gravy for the foreseeable future, for years and years and years to come. As a primary home buyer, you need to continue to make that income, monthly salary, to continue to pay your primary home mortgage. But investor is a total different ball game.
Right.
Once you put the down payment in, guess what? You're gonna outsource all the debt service, all your monthly payment on your rental property to somebody called the tenant. The tenant, for years and years and years to come, we do all the rest of the legwork. Go now. You can go ahead and continue with your.
I don't know if I could say it any better. I think that was it was like peanut butter to my jelly, right? It was the perfect combination. I sort of teed it up, and then you closed it strong. I don't think I could add anything more to that, because it really is that, the difference is that, the primary homeowner has got to, have that income to make that monthly payment. Whereas all you have to do as the investor is come up with the down payment, 25, 30%, whatever it is, have the bank take the majority of the risk. And then you go, all right, I structured the deal. I'm the CEO of my real estate portfolio. I just structured the deal. And now I'm going to outsource the payment, not to me, but I'm going to outsource that payment to the resident, the renter. And that is such a beautiful distinction between the mindset that you have going in on a real estate transaction. You and I, we work with a lot of real estate investors, so we know this is, and the seasoned ones, they have this. The new investors that are just kind of entering this market, they've been toying with it, they've been thinking about it. It can get I can see how they would get very concerned and scared off, because they're like, it doesn't work. It's that low interest rates. But you're not looking at, you're the CEO of your real estate portfolio. You're putting the deal together, right? You have the down payment, you go get the financing from a lender, and then you outsource everything that is all the expenses for that property, you outsource to your renter.
Well, to conclude this point, before we go to the next slide, when you outsource to the tenant, that's where the multi-dimensional effects of your assets will come into play for years and years and years to come. Not only the first year projection. The first year projection in terms of cash flow may not be that strong, but that will change, because your tenant over time will pay down your 30-year fixed rate mortgage, and you will, not only that, your tenant gonna pay down your mortgage, pay down your monthly property taxes, pay down your property insurance monthly, gonna pay down your 8% to 10% of your property management fee, gonna pay down your 5% vacancy, if that's the case, gonna pay down 5 to 10% of your maintenance that you have to come up with. You are not coming up with the maintenance and upkeep, the repairs cost. The tenant will do all that. And at the end of the day, at the end of the month, or at the end of the year, each month, you still have money left over from the tenant for your own monthly positive cash flow. Let me put it another way. Let's say someone buy your property, new construction property in Alabama, in Athens, Georgia, selling for $275K, right? You have $1,900 projected monthly rent. An investor paid 25% down payment. They put in 6 to 6.5%. Maybe there's a rate pay down you guys can offer as an incentive. So your monthly cash flow, so what? $100 to $200 monthly net cash flow. But it's your money. Your tenants, your tenant is paying you $1,900 to buy that brand new construction home, and your mortgage, let's say, is $800. Your taxes, let's say, which is very low, the taxes like maybe $140 a month. Then your insurance like $75 a month. Then your property management fee at I don't know, whatever.
Oh, $9 a month, whatever.
Yeah, and then you factor in some maintenance and repair costs and vacancy costs. At the end of the month, you still have a couple $100 monthly cash flow. So your tenant is making you rich. If you put yourself, if you have a good professional property management and the right team on the ground, which you guys, Spartan Investment does, I mean, everything down the road is passive investing, and you can scale your portfolio. See, it's not that hard to become a real estate investor, regardless of where you live, 3,000 miles away, 1 million miles away, whether you live in the moon or Mars, or in the future, you can, there's a space travel for civilians. You can do that. You can live $1 million away and you're still able to thrive in your real estate portfolio.
Well said, Seewing. Well said.
All right, all right. Okay, let's conclude. This will be a short video. The other option, see, investors have so many options. You can always buy with cash, assuming you have cash. A lot of investors these days will buy with cash, right? I mean, in fact, Redfin came out with an article which I made a video on it. 30% of all the homes right now are purchased with all cash. You're buying. If you think interest rate is high, and you are a deep pocket real estate investor, you can pay all cash. So you can bypass all these issues associated with the 7% mortgage. So buy cash, you can achieve even higher cash flow because you have no debt, if you will. Or down the road, when interest rate gets better, you can always cash out, refinance, get a loan, and use the cash out refinance to buy multiple properties from this initial cash purchase you just did. And then finally, not finally, then you can also, you and I, Maureen, have helped many investors over the years to use their IRA, individual retirement account, to buy rentals. Not only that, you not only can buy a rental property with a full IRA purchase without any kind of debt, if you can achieve tax deferred growth, exponential growth, tax-free growth, and offer your income and appreciation. You don't have to pay taxes on it, which is a powerful vehicle. A lot of people are not aware you can use IRA to purchase investment properties. Furthermore, something more sophisticated, a lot of investors are not even aware this is available. You can also leverage your IRA to buy a rental property. If you buy $100,000 property or more, all you have to do is put down 50% down payment on your IRA and use a non-recourse lender, which you and I have, for the other 50% using a non-recourse loan, leverage your IRA so you can buy twice the amount of property you can buy had you put down the full IRA purchase on a particular rental property. So, and finally, Maureen, you and I discussing for the entire time, not just today, but prior videos, income property is a history's most powerful and proven multi-dimensional real estate asset class and the most tax favored asset class because there are 5 ways you can make the money. You and I discussed this until kingdom come is income, cash flow, depreciation, tax benefit, equity growth, appreciation, and leverage using loans. So go ahead. Now it's your turn.
Well, can you do me a favor? Go back 1 slide because I actually want to share a personal experience with anyone that's listening. So go back to the self-directed IRA slide, please, Seewing.
All right.
I know you technology. I'm like, you can do it. I know you. I believe in you.
I do that. I need to. Okay, here it is. Yeah.
There you go. Thank you. Okay, so this one I'll just share with you guys my personal experience. So when I first started in real estate 13, 14 years ago, I didn't have the knowledge about how money works now, like I do now. And so I wanted to buy some investment properties, but I didn't have cash, disposable income outside of my retirement accounts. So this is exactly what I did. I took option B and I converted some old 401ks. I rolled them over into self-directed IRA. And I purchased 2 properties inside my self-directed IRA using the 50% down. I did a non-recourse loan. And can anybody guess what my interest rate was on that loan?
5.5% perhaps?
No, higher.
6%?
Higher.
Wow. 6.5%?
Nope, I'm going to disclose it right now. 9.9%.
Wow.
I was paying 9.9% on that money to get into my first two properties. Now, I know to a lot of you, that probably sounds really crazy, but guess what? The deal worked despite that 9.9%. I was willing to pay the 9.9% to get me in these two deals that I purchased. They were, I think one was 78,000, the other one was 82,000. I met with my financial advisor 2 nights ago, and these properties now are paid in full. They're estimated, their value, current market value right now is about 165 to 170, right? So now I have two full hard assets paid in full that are putting several thousands of dollars a month in my self-directed IRA. And I have some money split. One's in a traditional, one's in a Roth, right? So this is a phenomenal option. If you've never thought about it, happy to talk with you about it because I've personally done it. It's how I got started. And that's why interest rate doesn't bother me, because if it doesn't matter what it is, as long as the property cash flows afterwards, after all expenses are paid each month, then it makes sense. It makes good sense. So if you need me to talk some sense into you, I will do that because I will share with you my numbers.
Oh, Maureen, I tell you, there's so, I mean, let's recap what you just said. Today's interest rate does not matter to a real estate investor. If the number makes sense, if the deal makes sense, even when you're paying a higher mortgage interest rate, if your projected rent is such amount in that it can cover your monthly mortgage with that high interest rate, it will cover your taxes, insurance, property management fee, 5% vacancy, or even 10% vacancy, or 5 to 10% maintenance upkeep, and then still have money left over at the end of the month for positive cash flow. I mean, it is that simple. You're working smart, not working hard. Your tenant is going to make you rich. All you got to do is come up with 20 to 25% down payment. That's it. That is it. We have broken down. So the recap is, just the mindset of this investor is so much different than the primary homeowner. Primary homeowner have one option. They can only work the monthly mortgage payment, based on the interest rate. But the investor is not that. The monthly mortgage for investor come from the tenant's rent that you're collecting. You're not paying the mortgage. You as an investor are not paying your mortgage. You as an investor, you are not paying your monthly taxes on your rental property. You're not paying the insurance. You're not paying the property management fee. You're not paying for the maintenance. You're not paying for the vacancy. The tenant is. This is mind-boggling, simple concept that existed for decades. So investors out there, what are you thinking? What?
Thinking with their primary owner brain.
Yeah, what are you thinking? Wake up and smell the roses. What do you have to do to kick your butt to pull the trigger? I need.
They need understanding. They need this kind of information so that they have, and then they have to get it through. Think about this, Seewing. When I made my first investment property, or my first investment in an investment property, I was scared to death, and I really didn't know it. These concepts sounded like they made sense, but only after you're in it and you do it, then can you and I speak like this and say, what do we need to do to kick your butt? Like, how do we get to motivate you, right? To get these concepts. And it takes a little bit of gumption, a little bit of guts, lots of knowledge, and the willingness to take the leap and to learn the concepts and proven concepts that you and I know to be 100% real and true. And so we just have to break that paradigm. There's, it's like the the old way of thinking and the new way of thinking, the old programming versus the new programming. It takes a minute. So give yourself grace. If you're over there wrestling and keeping yourself going, why didn't I take action? Why didn't I do that? I should have done that. It's like you're wrestling with the old programming and the new. We get that, and that's why Seewing and I, we can poke fun a little bit and say we're going to kick your butt, right? To get you into action, because we know the long-term benefit is going to benefit you and your family and your financial future. So
yeah, we're just giving people out there, you and I, Maureen, are giving the people out there some tough love. We love you. No hard feelings out there. Okay, we just want you to do that. All right, so I think I'm done. I'm emotionally drained. Hopefully you and I, hopefully we will provide some value for our investors. And for those of you, listen to my YouTube video, please click the like button to increase my YouTube channel and subscribe to my YouTube channel. And better yet, contact myself. My information is at the bottom of the video. Contact myself to become our free member of our monthly newsletter. Log into my website, and also you can log into Maureen's company website, www.spartaninvest.com, right, Maureen?
You got it, 100%.
All right. Thank you so much for your participation. You always provide some powerful messaging. Hopefully they can inspire and motivate investors to take action regardless of the situation. So, all right, Maureen.
That's the mission.
Thank you so much. Have a nice day, everyone. Thank you so much. Bye-bye. See you next time.
Bye.